Reports say that local investors are beginning to dominate Africa's startup funding scene. I guess that comes as no surprise when you see a country like the United States cutting aid to emerging economies. So how can startups thrive in the midst of this new funding strategy and perspective? We have a senior product manager, Chika Nwokocha, joining us for this. Hi, Chika. Good afternoon.
Hi, good afternoon. Happy to be here.
Good to have you. So, I mean, it's no longer news that there's been pullback in venture capital globally, especially directed towards Africa. What are the new trends? What are the biggest shifts at this time?
Yeah, thank you for having me. So, to be honest, funding is really drying up big time. To be really fair, even strong fintechs like Basopay, they had to shut down. Pillar as well, which had a fast-growing savings product, also exited Nigeria. So it's not about the bad ideas, right? So it's just harder now to survive now, especially when the easy money isn't there. To be fair. So in fact, startup funding in Africa has dropped for over 50% to $1.1 billion in 2024, and Nigeria felt that hit hard. So founders are forced to think leaner, spend smarter and build product that actually pays the bills.
So, what should they be doing? What should startups be doing? What would, attract? We see the locals now getting interested in the funding. So, what should they be doing to get this attention that they need?
Yeah, so honestly, it's all about shifting focus because a lot of B2C fintechs like Bonjour Africa really found it quite tough relying solely on end users. Despite achieving 1 million app downloads, they had to shut down their exchange services in 2023 due to regulatory compliance challenges here and there. So meanwhile, business to business players like Namba, formerly Kudi, have been quietly building services for businesses and staying alive. Recently they raised over $30 million in pre-series B round in 2023, and they're now serving over 300,000 businesses, processing $1 billion monthly transactions. So today, reinvention now means focusing on models that actually brings in steady revenue and not just user numbers in general.
Yeah, but I've heard a lot of people say reinventing and refocusing should mean providing solution to local challenges. What about that perspective?
Yeah, so for startups that are actually definitely playing it safe right now, it's almost making founders like actually really sharper, right? So for instance, for Money Point, to be honest, they actually didn't chase the hype. They actually focused on building properly, step by step, and they're now one of the most profitable fintechs in Africa. So in 2024, they raised over $410 million, hitting $1 billion valuation, and they're now processing 800 million transactions monthly, right? So now it's not all about building problems, right? It's about building the real problems in the background. And those kind of models actually keeping them really strong, right? So that's the kind of focused innovation that is working right now. So yeah, it's not about growing fast enough. It's all about growing right.
What about alternatives? Um, well, they say necessity is the mother of invention. Perhaps this
Yeah.
crunch could create some alternative funding avenues.
Oh, yes. So founders are now leaning into angel investors, grants, customers' revenue to stay afloat. So a recent report revealed that over 43% of Nigerian startups are receiving funding from angel investors, including family and friends, over the past decade, surpassing those 24% that's been funded by venture capitals. Take for instance, Fair Money, for instance, they have grown their gross revenue by 62% to 121.9 billion in 2024, and they rely heavily on customer revenue. So it's all about bringing those revenue-based vehicle financing and expanding it to 16 global markets. So these examples are showing that raising money isn't just always the win. It's all about staying alive as well.
So does this threaten the sustainability of startups on the continent?
Oh yes, it does. It does. Honestly, because I've seen a lot of teams that have come together, after the shutdown. Ex-Leatherpay engineers are working on new things. Founders from companies like AO as well, they're sharing spaces, sharing knowledge. In Lagos and Abuja, more founders as well are collaborating instead of competing, because right now it's all about survival and shared wins, and not egocentric, to be fair.
Yeah, well, some things have to bring down that ego, yeah. So,
Yeah.
but this isn't supposed to discourage new intakes. But what should they look out for if an individual was
Yeah.
thinking of
Uh, uh,
just coming to the scene and missed this crunch?
It's quite simple, just solve real problems. Don't wait for venture capital validation. Just focus on your users. Build that trust. Charge early if you can. Look at companies like Paystack, Core that are building real businesses, they are solving real pain points, and they are scaling naturally as well. So for Paystack, in July 2024, they processed trillion in transactions in a single month. So that's a testament to steady and focused growth. So this is not the time for noise. This is time to build value and let that speak louder than any pitch deck you have.
All right, I hear you build value. And if I don't hear any, I hear that. Chika Wonkocha, Senior
Yeah.
Products Manager, thank you so much for your time.
Thank you.